Decide when to sell an asset before you buy it. Buying an asset can be easy. If you have the money, selling is often much harder because when it's time to sell, emotions can cost you money. That's why you need a plan before you invest. At first, you might buy an asset thinking you'll hold it forever, but markets change, prices change, your circumstances change, and sometimes your view of the asset changes too. There may come a time when selling is the right decision. The challenge is that emotions can stop you from acting. Sometimes the reason to sell is because the price has fallen. Other times it's because the price has risen too much. For example, imagine your investment plan is to hold 70% conservative assets and 30% speculative assets. If one speculative investment suddenly skyrockets in value, your portfolio could become 70% speculative and only 30% conservative. That increases your overall risk. To rebalance your portfolio, you may need to sell some of that speculative investment and move the money into more conservative assets. But when something is going parabolic and everyone thinks it will keep rising, selling can feel difficult. The same applies to stop losses. You might decide before investing that if an asset falls to a certain price, you'll sell to limit losses. But if that sell isn't automatic, emotion may stop you from pressing the button. Hope can override discipline. That's why having an exit plan matters. Before you buy any asset, you should already know why you're buying it, what conditions would make you sell it, and how that decision fits into your overall investment plan. Because risk management isn't just about buying wisely. It's also about knowing when to sell. Disclaimer: this content is for general educational purposes only and is not financial advice. Investing involves risk, and you should always do your own research. Subscribe if you want to learn how real assets create income and options over time.